I've just finished watching the VW Q3 2022 earnings report, the full 1 hour, 45-minute presentation, so that you don't have to. The report was covering things from VW losing margin in their biggest market, which is China, flooding causing production on 100,000 vehicles to be halted, and also a $2.5 billion loss on commodity contracts. So I want to put my thoughts out there why VW shareholders should be positive after this report, and why I think VW and why I hold VW shares on my eToro portfolio. So first, my notes from the call. Margins in China may well be slipping, but the total number of vehicles being sold in the last year is definitely up. In total, they are up 9% worldwide, and in the last 9 months, they are up 11%. Next, electric car sales are up 45% year on year, something that I've not seen reported about much anywhere else. Now, the concern is that electric cars are not profitable. For me, the big issue is just scale. As the number of electric car sales increase, profitability should increase also, and overheads should become less per car. The next article you might read elsewhere is that VW had a $2.5 billion loss on its balance sheet this year due to purchasing futures contracts on commodities. This sounds really awful, doesn't it? But let's put this into context. This is less than 1% of their revenue. VW make far above $250 billion. Also, when people say VW bet on futures contracts, essentially all VW did was purchase commodities, the tons of raw materials they needed for the production of their cars ahead of time. So they purchased them, they locked in at a price, and all that happened was when it actually came to purchasing it, the actual real world price of those commodities went down instead of up. Now, typically, these commodity prices go up over time. And so no one really talks about it when VW make a savings on future commodity prices. However, because the price of commodities went down, VW are smart and they can put this on their balance sheet as a loss. So it will negatively affect their free cash flow by $2.5 billion. However, this is a non-cash loss. It's just a paper loss on the balance sheet. So yeah, if you are a Volkswagen shareholder, you might want to add $2.5 billion to the free cash flow in this quarter. Next up is the battery business. This is the single most undervalued aspect of Volkswagen shares. Historically, car companies have had low PE ratios. It might seem incredible to you as a new investor or even a long-term investor that Volkswagen has a price to earnings of 4, and a lot of car companies do. This is because it costs so incredibly much to develop a car factory. Basically, all the earnings that the car company makes have to go back into redeveloping new factories and new cars and new production lines, and not a lot of that money can always make its way back to shareholders. Batteries, on the other hand, are different. A battery can be placed in any country, can scale more easily, and battery cells are easier to transport. For this reason, the margins on battery cell production should be far higher than the margins made on producing and selling cars. On top of making VW higher returns, this will also massively increase the margins on their electric vehicles. The VW factory is going up in 𝗪𝗪𝗪 and is called 𝗪𝗪𝗪𝗪. The factory should be ready by 2025, but let's just assume that it's only going to be operational in 2030. VW are projecting that it will cost $20 billion by 2030 to produce, which even if it's double this, VW can certainly afford it. And they are projecting that it will make $20 billion in earnings each year. Let's say we make half that. Even with the return on invested capital being half that, this would still be an incredibly profitable business, and definitely something that would make VW a growth stock, not just a value play. These projections as well don't really account for inflation and rising demand for electric batteries and the increase in innovation and technology that VW will do over this time period. When it comes to companies investing in the future, I would much prefer to own VW, which makes incredible profits selling internal combustion engine cars and is slowly adjusting to the electric vehicle demand, and is investing $20 billion in battery cell production, over, say, something like Mark Zuckerberg, who is investing $50 billion a year on the metaverse. However, that might just be me. Let me know what you think in the comment section. Are you a Volkswagen shareholder? Are you a Tesla shareholder? Do you see VW succeeding in the battery cell space, or do you think that Tesla will take up all the market share? I'm really curious to know what you think. And thank you very much for watching. Goodbye.